Riveting content. Empowering your life. Welcome to the Sphere. This episode is sponsored by Elite Dental Wellness. At Elite Dental Wellness, Dr. Ashandra Batiste understands that one of the biggest obstacles is dental fear. The vision at Elite Dental Wellness is to ensure every patient is treated with respect, ultimate care, patience, and love. Call us today to make an appointment at area code 713-789-8680. Looking to advertise? Join the Sphere's vast demographic reach of thousands of people all over the world. Send an email today to advertise@thesphere.tv or call us at area code 832-772-7789. KOG and Company. Are your unique gifts and talents changing the world? Do you desire to belong to a community of unity? Visit KOGpassion.com to learn more about the Unleash Your Dopeness movement.
Good morning and welcome back to the Money Factor on the Sphere Podcast Network. I am Tony Sanders, your certified financial education instructor and also your licensed financial professional and the co-founder of the Houston Housewives of Finance. Today I have a special guest co-host. I'm so excited about her. I'm going to let her introduce herself, but it's none other than Miss Tamesha Wells. Yay, yay.
My name is Tamesha Wells. I am with Tash Realty Group. My slogan is, you deserve to live well, so just call me, right?
I love it. I love it. So tell them a little bit more about you, Tamesha, because I'm super excited about Tamesha. We've had the pleasure of, doing a couple of events together and really talking about how real estate and financial service and building wealth and leaving that legacy of wealth for our families. It goes hand in hand. Mm-hmm. So I was super excited when she agreed to come on the show today. So just tell them a little bit about your background and how you got into it, because I just heard about it too. So I was like, yeah.
Okay, absolutely. Well, I started off very young in the real estate industry. I was 19 years old when I bought my first 2 rental properties. I became an investor very, very early. I didn't know what I was doing and got taken advantage of a little bit. And so I really wanted to dive into the real estate industry to help others understand their way through this vehicle of wealth. And so I became a loan officer, got my loan officer license, started doing that. It was in that time where it was a lot of mortgage fraud going on. So it was a lot of criminals. And so it was very discouraging to move forward with that industry. So I went over to corporate America like most people do. I was with a large oil and gas firm for about 7 or 8 years and just couldn't do it anymore. So wow. I said, okay, I have to come back to the real estate industry. So I'm back. I've been back for 5 years and I'm taking care of my clients the best way I know how.
Absolutely. We hear a lot of people in our industry, they're always wanting to get into real estate. They're talking about real estate. And again, I truly believe with Houston Housewives of Finance, we always believe that they go hand in hand. So that's why I'm, so with friends with so many realtors. And when I was thinking about today's show, I thought about, let's show people how they really tie in together.
Yes.
Because they have a really big tie-in. So if we can go to our first article of the day, we can jump right into it. Man, when I saw this, it says the next step after buying a home with someone, because most people don't realize that, okay, you bought this home, but now what?
Yes.
What's the next step? There's a lot of other stuff that goes with, purchasing a home, and most people don't even realize, look, I'm used to being a renter. Mm-hmm. And so now the responsibility falls all on me. So that's a big deal. So let's see what the article has to say. So it says, once you've closed on a home, you've gotten a mortgage. There's one important step to take. That's right. Even after you've completed tons of paperwork and you've survived the stress of buying a home with someone, there's another move that it's a good idea to make. If you don't already have one, a life insurance policy could be a great purchase. And it just goes on to say, how it works. When you purchase a life insurance policy, you're making a payment on life insurance company. In exchange for your payments, the life insurance company agrees to pay the beneficiaries a lump sum in the event of death. Life insurance helps provide your loved ones that are no longer around to do so. It also provides with the incomparable peace of mind. Having it means that whoever you leave behind won't have to suffer for a major financial blow. And I kind of want to stop right there because I want to get your feedback on it, because what most people don't realize is, hey, this is the largest investment that they're going to make. And they're not thinking about, Lord forbid, prematurely, if something was to happen and you haven't paid off that home, because they don't own the home, they own the mortgage.
Correct.
How are they going to pay it off?
Well, this is a very important topic. A lot of people don't understand that, hey, you do need that coverage. A lot of my clients say, well, that's just an extra bill. Well, that's an extra bill that's going to protect you and your family for years to come. So don't take it lightly that life insurance is important. Life insurance is very, very vital, and you need it.
Absolutely. So again, most people take it, they say, oh, it's another bill, but it's not really. It's an investment that's going to go along with, you're buying this home. That's an investment. And so I think if we start looking at it in a different way, because people are like, oh, I don't want to pay any more money. But what if?
Yep. What if? I actually have a ex-classmate, a high school classmate who passed away very recently. He was 38 years old, passed away of a massive heart attack.
Wow.
Did not have life insurance.
Did he leave a family behind?
He left a family behind. And so that family had to do the GoFundMes and different things like that. You don't want to be that person. You do not want to be that family who has to reach out to others. Take care of your family first. So be sure to get with someone, a professional, who knows what they're talking about. Get a financial analysis done on your
and that's what we do,
right?
We're able to provide you with that financial needs analysis. But more so, when I'm thinking about a young person like that, you think about they still have their home that they have to pay for. They have their kids to go to college. I mean, just that economical value that's lost when someone passes away. I don't think people really are taking it serious enough.
They're not. They're definitely not. I know once you purchase a home, some people do ask about mortgage insurance, but sometimes they really need to sit down with that financial specialist to go over life insurance that will cover not only your mortgage, but also other things in your life.
Absolutely. And it's really important that you do that. Contact the Houston Housewives of Finance, because that's exactly what we do. We want to be the resource for people. We tell people that we're the new source, we're the new face of the new age of financial services, because most people, they don't even think about that part. They just say, oh, I just want to buy a house and that's it. There's so much more to go just to buy the house.
It is.
It's just so much more. And so I'm going to allow you to kind of dive into that piece of it a little bit, because I want people to understand that, real estate, when we're talking about leaving a legacy, of course, that's a part of that pie. When we're always telling you to diversify, you want to have some real estate. You have to have a place to live.
Absolutely.
Have to have a place to live. So when people are coming to you, what's the first step, or give us some tips on, how before they even get to that point of purchasing that home, because I know you're going to call Tamesha.
Absolutely. I hope you guys do call me. I always walk through the process with my clients. I let them know, what to save for. You have to have an emergency fund. You can't just utilize everything that's in your savings to purchase a house. You definitely want to take care of yourself first. So definitely do that. Make sure your credit is up to par. If it's not, we have the right people for you to get you there. Because I do believe that home ownership, everyone deserves home ownership.
Absolutely.
Everyone deserves home ownership. And so all it is the education that you need. We'll provide it to you so that you'll be on the right path.
Awesome. And that's one, I'm glad that you said that, because most people, they want to use I know they use their 401ks. I know that they use their emergency funds to put down on that home, but they really need to have, extra money to the side. They really got to plan for it. So how much do they need to have to put down on a home?
Well, it really just depends. With all the different programs out here nowadays, we can get you in a home with a credit score of 580. However, just note, I am not a mortgage professional, so these are just my numbers. With a 580, but of course, there's extra stipulations, debt to income, et cetera, which we can explain to you in depth with a one-on-one consultation. But it really just depends. If you're doing an FHA, that's 3.5% down. But that's just the down payment. That's not including your closing cost. So I always tell my clients, look at what you're trying to purchase. Not the amount of house, but you look at your mortgage payment. Because some people are like, oh, I want a $200,000 house. Okay, but do you understand what that mortgage payment would be? Right?
Wow.
Some people don't.
Wow.
So I don't go off the amount of house. I'll go off of the amount of mortgage payment that you are capable of.
And that'll let you know how much house they can
Absolutely.
afford.
Mhm.
Wow.
Absolutely.
See, it all goes back to the education. We always say here on the Houston Housewives of Finance, the knowledge is power, but the application of knowledge is even powerful. So just not in financial service, but in real estate as well, you got to do your homework.
You definitely do.
You have to do your homework, and you have to get with a professional, a licensed professional, to seek all the information and things that you need so that you can make the right decision. Because I know in the past, people have made some really bad mistakes when it comes to mortgage. I know when we had the industry was all messed up several years ago.
Yes, the mortgage debacle.
Oh my goodness, and all the bad loans and things because people weren't educated.
They wasn't educated. Not only that, there was some bad people out there.
Right.
Understanding that these people cannot pay for that mortgage, but they still put them in that house. Right.
And they knew that.
And they knew it. That was the bad thing. When a professional has the information but does not provide it to you because you you have the lack of knowledge that you need.
Wow. So with that being said, we're going to go to our first ad. This portion of the show is being sponsored by Elite Dental Wellness. At Elite Dental Wellness, our vision is to create a welcoming practice that will offer exceptional dental care and a lifetime of dental wellness. We are committed to the finest and possible oral care and overall health and well-being of our patients. Elite Dental Wellness is built upon a foundation of integrity, expertise, and service. Through our commitment to modern dentistry, continuing education, and friendly atmosphere, we strive to make patients feel that they are a part of our family. Dentistry can be scary and daunting and uncomfortable. Dr. Batiste and her team work tirelessly to ensure your comfort. Make your appointment today with Dr. Ashandra Batiste at Elite Dental Wellness by calling 713-789-8680. Yes, honey, you got to have that grill right.
Yes,
you're going to be
you
in
do.
front of people's face.
Absolutely.
Yeah, so let's go back to the article because I kind of want to see what it has to say. It says, generally speaking, there are two types of life insurance, whole and term life. I like to kind of change that. I like to say permanent and temporary. Term is a temporary solution. Term insurance policies last for a specific period of time, ranging from anywhere from 5 to 30 years. You make payments for this term, and if you die during the time, a benefit is paid out to our beneficiaries. If you outlive the policy, no death benefits are awarded and don't give you any money back unless you opt out of the premium policy. Your whole life insurance policy, on the other hand, is a permanent form of life insurance. Coverage does not expire, and the death benefit is guaranteed as long as you pay your premiums. Term policies usually have lower premiums, but whole life insurance policies can offer cash and reserve dividend options. The amount of your insurance policy pays out the cost of premiums depends on the insurance company's special formula, which takes your age, gender, and your health into account. It is best to choose the right policy for your circumstances so that you can save without sacrificing your insurance needs. And this is why I wanted to talk about it, because most people have, a 15 to 30 year mortgage. So whatever is left on your home, you could just get that term to cover that mortgage, because again, you don't own the home, you own the mortgage.
Correct.
So I mean, I want people to understand how important it is, because life happens. People get disabled, they're not able to pay their mortgage, and we want to make sure that people can sustain that home. Because it's easy to get in. I tell people all the time, you can get into whatever you want to get in.
Right.
Can you
It's
keep
the exit
it?
plan.
Hello? Can
Or
you
keep it.
Yes. Can you keep it? So let's talk about that a little bit, because most people think, oh yeah, I'm just gonna get into this house. But when you're coming from being a renter versus being a homeowner, let's talk about some of the things that people don't even consider. Because you've had a landlord, so you haven't had to do some of the things that are now on you. They're your responsibility. You become your own landlord.
That is true. Some of the things are, just the normal wear and tear of a home. You don't think about the dishwasher going out, something, happening with the toilet. And especially if you're single female, some of those things you're not going to want to do or you don't know how to do.
Right.
Some things that we put in place, I make sure my clients always keep up with their home warranty, because that's what the home warranty company is for. I always tell renters, don't be afraid to become a homeowner, just be prepared,
That's good.
And so in the preparation, we are here to educate you and tell you what things that are available to you so that you won't have that fear going into that home. You can be prepared. And a home warranty, not to boost about home warranties, but I think it's definitely needed.
Absolutely.
Just like homeowners insurance.
Right.
Everybody has to have that. But what about that home warranty?
You know what I tell people? That insurance is for that just in case. And it's not a matter of when, if, it's when.
Yep.
Because something happens. I can tell you my personal story, how you definitely need that insurance, is because I moved into my house on the first night. I was supposed to go to a church event. I couldn't go. The first night I moved in, the AC went out.
Ouch. That is the biggest thing.
The biggest expense. Girl, I was miserable for a few days, but thank God for that home warranty. Absolutely. Thank God for that home warranty. I had the inspection. I did everything that I was supposed to do, but unfortunately, it was just one of those things that went out. And of course, it was in July.
Oh,
yeah, it was in July.
The heat of the summer,
The heat of the summer. So it's really important that people understand that we're just not here advocating for, that you need to get insurance. We're telling you for a reason. No matter what type of insurance it is, it's there to protect you.
Absolutely.
It's definitely there to protect you. Especially as a homeowner, man, you want to make sure everything is definitely in place because that's a huge expense. And if you're just moving into a home and now your AC go out, your dishwasher go out, or you have a leak. Oh, I could tell you so many stories that has happened to me. Christmas Eve, and I'm walking to the laundry room, and I walk into a puddle of water.
Oh,
yes.
I get it.
It's always happened. So you have no control over that. You have no control over that. So let's go. Anything else on that article that we can kind of look at? It says, how much life insurance will you need? You want to take that from there? You want to read from there?
Where are we?
It says there are all sorts of there you go.
There are all sorts of expenses that come up when a person dies, including the cost of funeral arrangements. Now, that is very true.
Yes.
Therefore, when you die, your unpaid debt will get deducted from your estate. Co-signers or joint holders of loans and credit cards may be held responsible for paying back what you owe. If you're convinced that you need life insurance, how much do you need? You'll need to think about your age, marital status, your dependents, your income, your debt, your savings, and investments. You don't want to leave your family with more to pay than they can afford.
Absolutely. You know what I tell people all the time? Insurance is just something, so when something happens to you, the insurance policy will pick up.
Yep.
It picks up where you left off. That's what people don't get. That hey, it's like almost like I explained this to somebody the other day, and I want to get your thoughts on it. I said, okay, so you buy a $500,000 house. Buy a $500,000 life insurance policy to cover that. I mean, both of them are investments. Both are investments.
But I would really suggest for them to get a life insurance policy that's over the amount of their mortgage, because you have other debts that you don't want to leave to your family.
And we're going to talk about that amount, but they got to protect that investment.
Yep.
They're not even protecting that investment. Most people are underinsured or have no insurance at all. So we're definitely going to talk about that later in the show. Okay, so we come to this portion of the show where, hey, Facebook only lasts for about 15 minutes, and then guess what? You got to go and subscribe to the Spirit Podcast Network, okay? We want you to subscribe. This is our 23rd episode. Come on, you guys. We need you to go and subscribe. Subscribe to the show they're on all major platforms, including iTunes, SoundCloud, Google Play, and Stitcher. Give us a review. We want to know how we're doing on the show. Show on iTunes with constructive criticism. Hey, if it's something that you want to tell us, something that we can improve, we definitely appreciate it. We want you to share this show on Facebook Live and the entire show with your family and friends. And share it. Tag a realtor today. This is very important information. Hey, you want to donate? We bring this show to you absolutely free. Our mission is to bring enriched and inspiring content and each and every week. So you can also donate to the www.thesphere.tv/donate. So definitely, we want you to go check us out on the Spirit Podcast Network. All right, so now Facebook Live is over. We're going to get back to the show and continuing on. So look, what I want to talk about too is importance of having the insurance and having enough. I saw a post, and it was people are always on social media, giving information, and they're not qualified to give the information.
Yes.
So I'm like, okay, now let me put in my little 2 cents, okay? Let me put in my little 2 cents.
Let's do it.
Because most people, they're taking advice from, they want to buy a house, but they're not talking to a realtor.
Mm-hmm.
They want insurance, they're not talking to an insurance agent. They sick, but they don't go to the doctor. Okay, social media has its place, but let's keep it real. You have to talk to a professional person. So if you want to know how much you need, can we go to the page for the dime method? So I'm glad that you brought that up, because we also teach the dime method. There's actually 2 ways that you can decide on how much insurance you need, because most people don't know. Again,
correct.
Either they're underinsured or they don't have enough. So we use the dime method. It says many people buy policies worth $100,000 or $200,000 or $300,000, but they may not be enough. The dime method offers a easy formula to calculate your life insurance protection need. How do you calculate it? Well, it's called the DIME. It stands for debt, income, mortgage, and education. So here's an example of someone who needed $730,000 worth of protection. Well, they had $50,000 in debt. That was combined credit card loans and other debt. Mm-hmm. Then they had their income. You always want to protect your income, which was $360,000. That's $3,000 a month. They made $36,000 a year to replace their income for 10 years. That was a question that came up today, and they were only replacing the person's income for 2 years. It's not enough. Mortgage. You want to put the mortgage balance in there. Again, you don't own the home. You own the mortgage. And if you pass away and you cannot pay that mortgage, the bank will take that house back. Education, assuming that was $15,000 a year for a 4-year college for 2 kids, that would be $120,000. So that's how they came up with the $730,000 with proper protection. Most people have protection on their house, their cars. I've even seen pet insurance, travel insurance, cell phone insurance, but we're underinsured when it comes to the ones we love.
I definitely agree that the I in dime is one important one that a lot of people just do not calculate.
Right.
Yes.
Right.
So that income, you think about your mortgage, you don't think about your income. Sometimes you don't even think about your credit card debt. Mm-hmm. So you have to put all that into a factor.
Absolutely.
And a lot of people don't.
And
very
that's
sad.
That's the most important. If you don't have a person's income, and I tell this to whoever the head of the household, I'm talking to you. If you are the head of your household, you must protect your income. That's how they're going to continue on.
That is true.
If they don't have your income, how will they carry on? Mm-hmm. How are they going to feed the kids? How are they going to pay for the mortgage? How are they going to send the kids to college? There's so many things. How are they going to everything? You can't do anything without the income. And especially stay-at-home moms.
Oh, I was just about to say that. Yes, indeed. Stay-at-home moms have it. I don't want to say the words because you guys are great.
It's tough.
It is really, really tough. They don't think about the life things that they need, just everyday food, gas, transportation, all those things. If your car is paid off, you still need insurance. Mm-hmm. So think about all of those things. All
maintenance
your life
on the car.
Yep.
And so when I was thinking about too, Tamesha, this is what I was thinking about. Let's say we have a stay-at-home mom. and the husband, he goes to work and he's making a great living. The wife is able to stay at home, keep the house, and keep the children. Lord forbid, if something happens to that husband and that income is no longer coming in, that's why he needs the life insurance to protect his family.
Absolutely.
Now let's reverse it. He's at work, something happens to his wife. Now who takes care of he can't stay at home.
He can't. No.
He cannot stay at home to keep the kids, cook, clean, get them to soccer, get them to all the cheerleading, the football, the basketball. That wife's income, being a stay-at-home mom, they say it averages over 6 figures to
I'm sure
do
it
that
does.
job.
Absolutely.
That's
because
a
if you had
job.
to pay somebody
If
to
you
do all
had
those
to pay
things,
somebody, that's quite a bit.
absolutely.
And I think that's what people aren't thinking about. So, Michael, is there anything else on our article that we can share? Okay, well, good. So, look, I'm really excited about the next one. I think you're going to take off with this one. Investing. Let's talk about investing a little bit.
All right.
So, what about on the investing side in real estate? What do you got to tell us?
Well, I think that if you're a homeowner, think about investing next. Like I said, I was 19 when I first invested. I think it was a great experience. It opened me up to the many things in the industry, the real estate industry. I do feel like a lot of people use it wisely, investing, but other people don't. So the individuals that use it wisely, they send their kids to college with those funds so that their kids won't be affected later on when it's time for them to actually acquire a mortgage. Because right now, a lot of individuals are being stopped from purchasing a home because of student loan debt. It's really huge.
It's huge.
It is really huge.
It has taken over credit card, retail, and automobile debt. So it's really huge.
Yep.
Wow.
And one thing that we say that, please don't get mad at me, but
Hey,
I'm
you're just
on the
a
real on
messenger.
real estate. Yes,
Hey,
I'm
I'm
just a messenger. It's like predatory lending. It is true predatory lending, and at its finest.
Wow. So people got
A lot.
a lot. That's unfortunate. That's unfortunate. I'm curious to know, because you said 19. I'm thinking, wow, there's a lot of millennials out there who could really, take advantage of, because they're not your typical. They don't want to work the traditional way.
Correct.
They want to do some other things, and they don't want to be, locked down into a corporate America where they have to work a 9 to 5, and they're so free and carefree and wanted to do. And I'm thinking, wow, 19. They should be able to do that. But I'm thinking at 19, how many 19-year-olds can go out and get a loan to purchase the home, to have the investment property? How would all that work?
Well, a lot of them are really ambitious. They are ambitious. And so right now it's about your credit. Their credit is either they don't have any credit or they have good credit, right? Because they haven't had the opportunity to mess it up. Right. So one thing I'm a part of National Association of Real Estate Brokers. I am actually on the Young Realtors Division of NAREP.
Yes. Well, yay. Tell
I'm
us
the first
about
vice
that.
president of that organization, and we focus on educating individuals on other opportunities in life. How to become a real estate professional, what to do in that area, how to become an investor, things like that. Just educating the community and the younger generation. My youngest client, a homeowner, is 22 years old.
Wow.
Now, that's just my youngest. I'm with Tamesha Wells Group, and we are big fans of generational wealth. And her, one of the agents, the broker, Miss Letitia Grant.
Her son
is now
yes,
an investor.
Yes,
and
I
he's
saw
18.
That. Wow.
He's 18. And so we're really trying to focus on the youth so they can get educated of how to be debt free when you get older, using real estate as a vehicle to finance your life.
That's awesome. 18 years old. 18.
Yes.
What a way. But you know what? When you have a great mom like Letitia and she's kind of leading the way, that's what it is. And again, it goes back to the education, because if she wasn't educated on that, then she couldn't pass that great information on to her son.
Yes. Opening up different career paths for the kids.
Absolutely. All right, so we got to go to our next sponsor, which is sponsored by The Sphere, of course. Are you starting a business or looking for a place to advertise? Do you have a need to reach out to thousands of people across the world to build your brand or sell your product? If so, get your product placement and advertising needs handled right here at The Sphere. We offer a wide variety of content delivery platforms, including iTunes, Google Play, SoundCloud, Stitcher. Plus, we have a vast demographic reach within the United States as well as modern countries across the globe. Our enriched content and inspiring dialogue, coupled with your strategic ad, is surely to hit the mark every time. Call us today at area code 832-7789 or email us at advertise@thesphere.tv. Wow. Wow, boom, yes. The Sphere is definitely growing. I mean, wow. This is our 123rd episode.
That is amazing.
Yes, we were one of the first shows here, and we definitely have a shout out to Gary Lee, who always keeps everything fresh and new here at the Sphere. But yeah, I really love that kids are really getting into young adults are getting into more, financial services, whether it's insurance and just financial services in general, whether it's real estate. It's just teaching that generation, because before we didn't have that many, especially in the African American community,
Correct.
who really dove into it. And so it's really important that we kind of keep it going so that we can create that generation of legacies and generational wealth in our community. And I think it's really going in the right direction.
I believe so too. I believe so
really
too.
do.
NARAB and HBREA, we have a mission to get 2 million African American in homes in the next 5 years.
Wow.
We are in year 2, I believe, 2.5. But we are doing our best to make sure that home ownership rate, which is less than 42%, which is less than it has been since the Great Depression. So we're trying to make sure that everybody is, pretty much equal across the board.
Why don't you think we have more homeowners? Do you think they just don't think they can qualify? Why is that?
My opinion is lack of education. I think education is key. And other ethnicities, they do educate their kids at a younger age as to what homeownership means. And it's no question to, are you going to own a home? It's when.
It's understood.
It's when you're going to own a home.
Absolutely, it's understood. And another thing that I see as well is we never leave anything. We don't pass homes down. Like back in the day, you would have your grandmother's home or somebody's home in the family would be passed down to the next generation. And I always talk about we have to start leaving wills and not bills. Leave somebody something so that we can make that next generation better. And that's the same thing that we do with the Houston Housewives of Finance. That's just our ultimate goal. Our ultimate mission is to leave legacies of generational wealth, make sure that people can retire with dignity, making sure that you're leaving that next generation better than the generation prior to.
Right.
And it's, we have work to do. We have work to do because I think it's a mindset in our community that we have to fight against to change, because we're the number one consumers, but we're the worst savers.
That is true. I know in communities such as Acres Home and Sunnyside and South Park and things like that, a lot of our individuals are not leaving those properties to their families. They're letting investors come in and pay and buy it up, refurbish it or rehab it and sell it for double the amount that they bought it for, if not triple. So that is something that we are trying, we as Task Realty Group, HBRA, and multiple other entities are really focusing on those areas so that we can tell these people, make sure you protect your asset. Make sure you can will it over to your grandchildren, their children, whoever. Make sure you keep it in the family, because if you don't, it will be bought away from you and sold at a higher price.
Wow.
To someone of your color.
So somebody else is going to get it and take advantage of it.
Absolutely.
And benefit from it, where your family could have done the same thing and benefited. So, wow. One thing I like about Task Realty and HBRA is Women's Council.
Yep.
Certified financial educator. They love educating financial literacy, and of course, we're on a mission to educate. Where's my button? 1 million families by the year of 2020. And so when I saw that they were doing that, I was like, wow, I really love that initiative. So again, don't forget about our workshops. We offer workshops throughout the United States, including Canada, and we have some locally here in Houston, Texas. And if you're not in the Houston area, of course, you can search the website, and we have them all across the United States. On Tuesdays, we're at our location at 13831 Northwest Freeway, Suite 215. That's Houston, Texas, 77040. That's Tuesdays at 7 p.m. and on Saturdays at 10 a.m. On Wednesdays, if you're in the Midtown or Memorial City area, we're at 11111. That's 5 ones. That's Katy Freeway, Suite 100, Houston, Texas, 77079. Their classes are on Wednesdays at 7 p.m. and also on Saturdays at 10 a.m. And if those locations are not good for you, guess what? We have a financial center in Pearland. They do the business overview on Mondays at 7 p.m. and on Thursdays at 7 p.m. Now, let me look up for their address. Their address is 11233 Shadow Creek Parkway. That is Suite 255, Pearland, Texas, 77584. Again, all you have to do is contact the Houston Housewives of Finance. We're on all your social media platforms, including Instagram. We're on Meetup. We're on LinkedIn. We're everywhere. Just Google us. We're on the Facebook, of course, as the Houston Housewives of Finance official. If it doesn't say official, it's not us. So if they want to get in contact with you, Tamesha, how do they get in contact with you?
Yes, my name is Tamesha Wells. My phone number is 713-825-9139. Or you can always email me, realtor, at tameshawells.com. That's TAMESHAWELLS. Facebook, I'm also on Facebook, Twitter, Instagram, all those social media sites.
Absolutely. Social media is a big deal. I don't know why people don't take advantage of the marketing on social media. Y'all stop using it for the wrong reason and use it for the right. Give people some great content that they can use to change their lives. So let's go back to the next article, because I think this article is going to be really good for you.
Okay.
And it talks about, guess what, as an investor, the importance of life insurance as a real estate investor. It says you are probably already life insurance through your job or privately purchased, but you may not know how important it is for your real estate investment business. If you're invested in real estate, it's important to know how life insurance, how it can benefit you, where you get it, and why you need it. It says, what is life insurance and how does it benefit real estate investor? This insurance provides money to loved ones when the policyholder passes away. These insurance policies range from $10,000 or less over to $1 million. This money can be used to pay final expenses, provide money to pay living expenses for the family behind, and you may not want to think about your death, but it's one of the two certainties of life. Hey, it's going to happen. No one really wants to leave behind a financial problem and worries to the family. There are two major types of life insurance. We're not going to go on that because we've already talked about that. I want to look at one of the specific benefits that is overlooked by investors in real estate is the ability to borrow funds from the policy. That's correct. If you take out a whole life policy or a permanent policy that has cash value, you can borrow from the policy to help you make deals that you might not have the capital to handle otherwise. You get insurance to access the capital.
That is amazing.
That's amazing. Yep. People don't even understand that. You take Walt Disney, it was built on cash value life insurance. You know how Master P built his empire? On life insurance.
That is amazing.
You can really, because that's one of the major things that come in the way when people want to, invest and do things like that. They don't have the capital.
That is true. A lot of people do not have the capital, so they think that they can't invest. And I want to go back to the young individuals. Hey, you don't have to own a home in order to invest in a home.
Oh, that's good.
You know,
Because they don't want to own a home.
they don't want the responsibilities. They don't want all those things. And so what I tell them is that look at your future, evaluate where you want to go, and use this as a vehicle to get there. That's simple as that.
Absolutely.
And just get with the professionals that know what they're talking about, not the individuals who don't own anything, who love to give their personal opinion.
We're going to give their opinions. I love it because I see people all the time. And I'm thinking, let me just check out this person profile and see what they do. They're so far away from, everybody has an opinion.
Yes.
I'm not saying that you cannot give your opinion, but when you're talking about and investing in some serious cash, whether it's being a homeowner or being an investor, some of the biggest purchases you'll ever make in your life, you want to talk to a professional.
Absolutely.
You definitely want to talk to a professional. I suggest that you call Tamesha Wells at TAS Realty. I love the ladies at TAS Realty, and they're definitely professional. They definitely can take care of your needs. But, if anybody, they have a professional realtor, because we all know one, just make sure that you're using a professional.
Absolutely.
You can take the opinions of other people, but just that, have it in one ear and out the other.
Yes, take the information with
Absolutely.
a grain of rice and use it how you see fit. But make sure you talk with that professional so that you can get the true information.
Absolutely, because you can get
Facts.
some wrong information, and that could cost you a lot.
It can. That
That can cost you a lot. So let's see what else they have to say on here. It says, where do you get life insurance? Of course, everybody knows where you can get life insurance, from the Houston Housewives of Finance. That's who you contact. While this is used to be the main source of insurance that was purchased for 30 years, it's quickly being outpaced in other ways. The first alternative to purchase insurance is directly from the insurance company. Direct insurance companies sell term or whole life consumers. I don't want to get into all of that. I want to know, why do real estate investors need life insurance? It's clear that the investors can not only benefit from insurance, but they have specific need for it. Your expertise is invaluable to your real estate investing. You know how to manage your business, and you are the one with the capital. Your loved ones may not have this same process. They may not immediately have the capital to properly manage the business. I just told someone this yesterday. The insurance can provide the seed to the capital to not only keep their real estate business going, but to help them grow afterwards after they've passed. The capital can be the glue to keep things from falling apart. Wow.
Yep.
I just told someone that yesterday because he has a business, and he was like, well, he didn't have anything. And I said, well, if something happens to you, how did your wife keep this going?
And he didn't know.
He didn't think about it. He says, I don't know. This is your business. It's not hers.
Right.
She has to have something to keep it going. So even real estate, even real estate. And I can tell you, we could use this for any area of investing. People need insurance.
So what did you suggest to him? What life insurance did you suggest?
I suggested a permanent life insurance with cash value. Number one, because he's self-employed, no retirement plan.
Correct.
And if his wife is going to be able to continue this legacy, then there's got to be some money in place. There's got to be some capital.
Right.
And she didn't have it. And especially, again, going back to that dime method, 3 kids, college funding. Yeah, everybody wants to be able to say that they can give their kids are going to receive a scholarship. But even if you get a scholarship, you still need some extra funds.
Absolutely.
You still need some extra funds. So now there's enough in place. They can pay off the house. The kids can go to college. She can continue the business. The business can continue running. And she does not have to worry.
Yeah.
Because she's already going to be sad. But the worst part about it is, who wants to be sad and broke?
Right. No one. Absolutely.
Yes,
no one.
knowing that, hey, what am I going to do now? And they use real estate as a vehicle. They use real estate as a vehicle.
Well, that's really, really good. So I do want to dive in a little bit into, how do individuals use that life insurance to invest in real estate? I know we passed it up, but let's go back to it.
Absolutely.
Tell me how. How would they do it?
So when you're investing in insurance and real estate, you can build up cash value. So like any other, there's places where you can put money, but we always suggest that you can also put it into your life insurance policy because it gives you no losses. So when you're investing, you don't have to worry about losing any money. The market downfalls you don't have to worry about. But also when you're putting money in places, for example, there's 3 places you can put money. You can put it in the bank, but it's not going to grow, right? It's not enough interest. You can put it in investments, but hey, it's going to grow and you can also lose.
There's risk.
But when you put it in insurance, you get the best of both worlds. You're going to get the safety of the banks and you're going to get the market returns of the market. This is also a vehicle that you can actually use to again pull out for those whatever you want to do. You want to start a business, you want to purchase a home, you want to send your kids to college. All of those things you can do in a life insurance cash value policy.
Now that's amazing. I think everyone needs to call the housewives of finance to get their financial state.
What people need is they need a financial needs analysis, because what people don't understand, Tamesha, is that those vehicles are available. Most people, when they're thinking about investing or they're thinking about their retirement, they only think about 2 things. Number one, whole life or term insurance. Well, insurance has evolved, and the simple way for me to explain it to people is just like our cell phones. We both have smartphones. Can I change your smartphone for a flip phone?
No.
Why?
I don't want to go backwards.
You don't want to go backwards, and not only that, the flip phone only did one thing. You can only make a call.
Yes.
With our smartphones, we can use it for so many resources. The same thing with financial products. The same thing with insurance. A lot of people have insurance that's outdated. And you have to just like we upgrade our phones, you have to update your life insurance policies. That's why we suggest that you do an annual review every year.
So once a year, you think they should do it?
Once a year, because life changes. You lose a spouse, you have a baby, you get married, you get divorced, you start a business, you sell a business. There's so many different reasons why life changes, life happens, and we've got to be able, to keep up with everything that's going around. So absolutely. You need a financial needs analysis. You need an annual review every year because things change. And we have some people that contact us, on a quarterly basis because life happens. If something happens in the middle, we want people to be able to just think about it. If something happened today, you want to wait until next year to discuss it with your financial? No. I need to call you right now. I need to sit down. I need to talk about you. Some things have happened. Because if it's a problem, it could possibly get worse.
Right. Not only that. So I have a client right now. She just called me. This is her second time calling me within a year, stating that she lost her job. Very unfortunate. I sold her a house I sold her house about 3 years ago and got her into a new home. And within this past year, she lost her job twice. So how do you advise them? Or what do you advise them to do in those circumstances? Because I know life insurance can also help not only in death, but also loss of job.
It's a living benefit, and that's why we try to educate people, and we ask you to come out to our workshops so that you can see how you can utilize life insurance for not just a death benefit, because most people just say, oh, it's only in death. No, ma'am, no, sir. It's also a living benefit for you to use in those circumstances, because if people are saving properly and they're investing properly, then she'll always have somewhere to go. But I want to go back with something you said. Not once, not twice, but 3 times she's been laid off. I highly suggest that people start a business. I really do. Because that's one thing that you will never get laid off. I will never get laid off. You will never get laid off because we work for ourselves. Your W-2 income, great. I understand that some people have to have their W-2 income. However, start a business, something that you can have on the side. Most people are looking for an opportunity. Most people are looking for extra income. Again, that's workshop 1, increasing cash flow and debt management, and making sure that nobody has to put you in a position where you have to make a decision whether I have to give up my home or I have to give up my car. But again, that goes back to saving, spending less and saving more. Do not increase your lifestyle, increase your savings, because life happens. And if you're not prepared, now what? Now you've got to consider giving up your home. And no one should ever have to make that decision whether I stay or do I go. That's unfortunate.
It is. It's all about being prepared.
It's all about being prepared.
Yes.
It's all about being prepared. And not, again, it's just, this is not just talking about and death. This is if you live, and then what if you live a long time? So they're saying that, we're going to live 22 years after retirement. That's 8,000 days. Are you prepared for that? Are you prepared in case something happens? If you get critical or chronically ill, most people don't even think about that. They're just going through the day-to-day life, the day-to-day process, and not even thinking about the what ifs. Because life happens. And unfortunately, it happens. I can't tell you who it's going to happen to, but it's going to happen.
Absolutely.
It's going to happen to somebody. So, yeah, for that particular person, I would definitely suggest that, they sit down and do a financial needs analysis, even where they are today. And they have to really take a hard look at, okay, this is where I am. I've been here not once, not twice, but 3 times.
Right.
Where do I go from here? What do I do?
So let's discuss this financial needs analysis.
Oh, absolutely.
Break it down for us.
A financial needs analysis is just kind of a snapshot of where you are. Let me see where you are today. Let me see where you're going. I tell people all the time, you have to have a plan. If you don't have a plan, you plan to fail.
Yep.
And most people have never had a financial needs analysis done. And it just shows me exactly where you are and what you have. And if you have goals, what are your goals? How are we going to be able to achieve your goals? What is it going to take for you? How much money should you be saving, and where you should be saving it at? Where do you put your money? Is it in a tax now, tax later, or tax exempt or tax advantage vehicle? Most people don't know. Tamesha, they've never sat down and had a financial needs analysis done. Most people, they're just going to work every single day and not really paying attention to their money. They're not good stewards, unfortunately.
Yeah, and I think that does come from, I always will say this, lack of education.
Lack of education.
You don't, in schools nowadays, well, always, we don't teach our kids how to balance a checkbook. Something basic as that, even though we don't have true checkbooks nowadays.
Right.
But you guys
still
get
have to
it.
balance.
You still need to balance your expenses versus your income. Know where you are so that you can know where you're going.
Absolutely. So this portion of the show is being sponsored by KOG and Company. Are your unique gifts and talents changing the world? Unleash Your Dopeness is a people empower movement built to encourage the masses to operate outside their fears and have the gall to recklessly pursue their dreams and passions in life. Join thousands of others as we unlock the greatness that dwells inside. Shop dope gear at KOGpassion.com. That's KOGpassion.com. And use the coupon code DOPE, DOPE, explanation point, for 10% off exclusive Unleash Your Dopeness apparel. Act now. Sizes are selling out fast.
You know what I'm saying?
Yes, I love KOG. She's doing some incredible things in the community. You know what? I want to go back to the Saving Your Future book. I want to show people the financial house and how important it is. This is what we call the financial house, the financial foundation. It says it's like building a house. You should start with a solid financial foundation and build it from the ground up. I tell people all the time, Tamesha, you've never seen a house built from the roof to the ground because everybody tries to build with investment first. But that's not the proper way. You have to have protection against your life, health, and disability. You have to control your debt. You have to control your debt. I can't say that enough. Most people are living on 110%. And that's unheard of. You cannot do that. Emergency funds. You must have an emergency fund because life will happen and you want to be prepared. Most people don't have $400 set aside for an emergency.
They don't.
40% of Americans don't have $400 set aside for emergency. And we know that to be true here in Houston, Texas, when last year we were hit hard with the hurricane.
Hurricane Harvey.
Yes, and people are still trying to
Recover.
and they yet to recover. And then the roof of your house is the investments. This is the financial house. You have to build it from the ground up. This is how you're going to sustain. So this, in the instance of a client who's lost, I would ask them about, hey, how's your protection and your debt management, your emergency fund, and your investments? Because if everything is in place and your house is built correctly, it says first you should have proper protection in the event of disability, health problems, or premature death. You should reduce your liabilities and get out of debt sooner. And you should set aside 3 to 6 months of your income to deal with sudden changes in your job.
Yes. 3 to 6 months,
3
guys.
to 6
3
months,
to 6 months.
yes, of your income and business to pay unforeseen accidents or repairs. And you should save and invest for the long run. And these tasks should be done as soon as possible.
Yes. Now, I know there's so many people out there that want to jump into their own business. Entrepreneurship is great. It is wonderful. You schedule your own time. You work as hard as you can to produce your results. However, people do not prepare for entrepreneurship.
Right.
They just take that leap of faith.
Absolutely.
Faith is great. I absolutely believe in
But
a
faith
higher
without
power.
faith without works is dead.
Correct. You have to have a 6-month reserve in order to survive in any type of industry, no matter if it's real estate, if it's retail, whatever it is. Have that emergency fund, because if you don't, you will, hopefully you won't fail, but it's a high probability that you will fail.
Absolutely, because life happens, and when you're trying to get a business off the ground, it takes more capital. It's taking more of your time, and you don't have, you're used to that W income coming in, and sometimes you don't get paid.
Yes, you have
Are you going to be prepared for that,
those growing pains.
baby? Because them bills don't stop coming.
They don't. They don't. They don't.
Those bills keep coming. But you know what? I wanted to share one thing before we, get out of here. Is I am so happy that Tamesha again was on the show today. But the reason I like to share this, because again, we know that a lot of people, purchase homes, and but the biggest thing that I see is worse. More than half of people think it's acceptable to default on their mortgage if they cannot afford to pay it. Please reach out to me, Tony S. at HoustonHousewivesOfFinance.com. You can text us on your phone. Text 31996 to ask HHOF, so that you can get your free personal financial strategy, your financial needs analysis done. You have to know where you are to know where you're going. Don't leave it up to chance. We want you to be prepared. Tamesha, thank you so much. Tell them again before we get out of here, how do they contact you for that next home, for that next investment property?
Absolutely. You can contact me. My name is Tamesha Wells at 713-825-9139. Again, that's 713-825-9139. Feel free to call me, text me. Let's schedule a one-on-one consultation. See where you are.
Absolutely. And don't forget to go to our website. It's hhofinance.com and schedule your personal financial strategy. Also, you can schedule your annual insurance review, because guess what? You've got to, again, know exactly what you have, what you need. Is it up to date? Hey, just give us a call, 1-844-700-4463. Again, I'm Tony Sanders and
Tamesha Wells.
we're going to say goodbye for now, but have a great day. Don't forget to vote tomorrow.
Please.